The 5 biggest mistakes beginners make with credit cards. So credit cards can be a phenomenal tool to help you travel the world for free, get cash back, build your credit score, but there are a bunch of potential landmines when it comes to credit cards, things that are gonna go really, really wrong. And so what I wanna talk about today are the 5 biggest mistakes. Hopefully you're not making any of these, or if you are, you can quickly course correct and be making solid financial decisions and using your credit cards wisely. Mistake number 1, not understanding how credit cards impact your credit score. So your credit score is something that's gonna follow you along for the rest of your life if you need to rent an apartment, get a mortgage on your dream home, get a car. Some employers even check your credit before giving you a job. So understanding how you can use credit cards wisely to build your credit score, not destroy your credit score using credit cards the wrong way. The most important factor, factor number 1, makes up 35% of your score, making on-time payments. So for banks, they want to know that you're going to make a payment. If you take out some type of debt, you're going to be able to make the payment. Factor number 2, the utilization of your credit card. So that essentially means on a per card basis as well as the sum of all of your credit cards, what is the percent of your available credit you're using? So if you have 5 credit cards, each of them have $1,000 of available credit and you're using $1,000. So that's 20% overall. And if you use $200 on all 5 cards, then it's 20% for each card. But if you spend all 100% or $1,000 on one card, that one card is 100% utilization and the rest are 0. The banks and the credit bureaus look at that poorly of having one card at 100% utilization, and your score is going to be brought down, even though on an overall basis, it's not that bad. We'll talk about credit card utilization more later on in the video. Factor number 3, making up 15% of your score, is the length of your credit history. How long have you had particular credit cards, mortgages, student loans? What is the average length of your credit? The longer, the better. Factor number 4, making up 10% of your score, is your credit mix. So what type of different debt and credit are you using? This is only 10% of your score. Don't go out and get different types of debt to try to improve something that's just a small amount of your overall score. Factor number 5, new credit. So anytime you apply for a credit card, mortgage, car loan, student loan, they'll do a hard pull from the credit bureau and you'll see your score drop by probably a handful of points. If you do a lot of hard pulls because you're applying for a lot of different types of credit, you're gonna see your score drop significantly more. It's cumulative or maybe even exponential if you're doing a lot within a short amount of time. If you only apply for one thing today, you wait a couple of months before you apply for anything else, you'll probably see a small drop in your score, and then a couple of months later, your score will have recovered and maybe even gotten better if you're making smart financial decisions over those couple of months. So if you're spreading things out, don't worry, don't apply for a bunch of different things all at the same time. After understanding the different factors that make up your credit score, now let's talk about the different mistakes that may be affecting that credit score. Mistake number 2, missing a payment. So as we just talked about, your payment history is by far the most important factor when it comes to your credit score. So you want to be making 100% on-time payments for all of your credit cards and all of your debts. Ideally, you set up auto pay for the statement balance, so everything you spend on your card in a particular month is paid off before the due date. You won't be charged any interest and you'll have 100% on-time payments. If you're worried about not having the money to pay the entire statement balance, definitely set up auto pay for at least the minimum payment. If you make the minimum payment on time every month and not the entire statement balance, you'll be charged interest on your credit cards, but at least you won't have the late payment fee, which could be $30 or $40. And if you're 30 days or more late on making a credit card payment, that's when the credit card companies report it to the credit bureaus. So if you're just a couple days late and you realize, hey, I never made a payment, open up the app for the credit card, make the payment. Nothing will be passed to the credit bureau, but you'll have the late fee. If this is the only time this has happened, I recommend calling up the credit card company, making up some excuse for why you weren't able to make the payment on time. And if this is the only time it's happened, a lot of times they'll remove the late payment fee. It's not something you can do frequently, but if it's once a year, a couple of years, or the very first time, they'll probably remove this late payment fee. Mistake number 3, overspending. So if you have a few $1,000s of available credit, it's really easy to just go out and make purchases. And when the statement comes, you're like, well, I'll just make the minimum payment. I don't have to pay the the whole thing off. I recommend treating your credit cards like cash. So only purchase things that you actually have money in your bank account to pay for. That means you'll always be able to make the statement balance. You won't be charged any interest on your credit cards. Also, don't apply for a credit card that has an amazing bonus that's outside your normal spending. So if you spend $1,000 a month, don't go out and get a credit card that you have to spend $6,000 in 3 months, meaning $2,000 per month, which is double your normal spending. Wouldn't you like to be able to just automate your finances, to set it and forget it, to know your financial goals are being set and you have to spend very little time thinking about money? Well, we have a free course that'll walk you through step-by-step how to do just that. If you're interested in signing up, check out the link in the description below. Mistake number 4, closing a card. So if you've seen any of my videos on credit cards for beginners or climbing the credit card ladder, we walk you through step-by-step how to get your first credit cards. And generally those are credit cards with no annual fee. And why do you want to have no annual fee credit cards when you're starting out? Is because you want the length of your credit history to continually get longer. So your no annual fee cards, there's really no reason that you would want to close them. Make a payment or two per year so they don't get closed down by the credit card company for being inactive. And for credit cards with an annual fee, there's nothing wrong with having credit cards with an annual fee if you're getting more value from the card than the cost of the annual fee. But for some reason you don't want to use that card anymore, or you're just not getting the value that you thought you would, call the credit card company and see if there's a way to downgrade it to a card that has no annual fee. A lot of times you'll have the same credit card number, you have the same available credit, you'll have the same on-time payment history, and your length of history will continue to get longer because you're not closing any of your cards, and each month another month is added to every one of the cards that you continue to leave open. Mistake number 5, not doing your homework. So what I mean by this is you're not doing research ahead of time, coming up with a plan and having a couple of goals of what you'd like to reach over the next, say, 6 to 12 months. You want to improve your credit score because maybe you want to purchase a home and you need a mortgage for that. Is there a particular credit card you want because you know what your spending is because you did the research and put together a budget and you track it? All these things take some effort on your part. So I see a lot of people just going through this very haphazardly. So if they never get any credit card offers, they never apply for any credit cards, maybe they have one they applied for in college and they don't really think about, hey, how can I improve my credit score, or how can I get the best rewards or cash back based on my spending? Maybe you're out shopping at Gap or Banana Republic and they offer you 10 or 20% off by getting one of the store credit cards. These are usually one of the worst cards because you can only use it at that particular store. Generally, not a huge percent of your spending goes towards that particular store versus having a credit card that you can use at grocery stores, at gas stations to pay for Uber, whatever it is. And so just kind of haphazardly applying for something because it falls in your lap versus thinking about improving your credit score and getting the best cards for the goals that you thought about previously. Those are my top 5 credit card mistakes for beginners. If right now you're looking to improve your credit score, check out the video up above. If you want to learn about the best credit cards for beginners in 2022, check out the video below. Hope to see you in those and future videos. Bye.